Okay, so we are done with 9 chapters till now, left with 6 chapters. In that, I'll try to cover two today. First chapter, which we are going to do today, is Budgets and Budgetary Control. Again, a very critical chapter from an exam point of view. Around 10 marks get tested, but very simple, no major concepts are there. 3, 4 concepts are only there. Now, let's first understand why do an organization prepare a budget. See, budget is basically a guidance document or a plan which is given to an organization. See, without a plan in place, it is very difficult for an organization to exactly understand what is required to be done. Even when you are doing your preparation, you need a plan of preparation. Without having a plan in place, I cannot measure whether I am in the right direction or the wrong direction. So this budget is prepared by an organization at the beginning of the year, and using standard costing you measure the performance, take certain corrective action. So this chapter forms the base for your another chapter called standard costing. Not to solve the question, but basically without a budget in place, I cannot have anything like a variance analysis which is done at the end of the year or at every specific period. So budget is a financial and our quantitative statement. So it could be a financial statement. Financial means expressed in money. Quantitative means it is expressed in units, hours, area, square feet, anything it can be expressed. So it's a financial and our quantitative statement prepared ahead of time. Ahead of time is basically it's a forecast which I prepare, and it helps me in achieving either a specified income level or an expense level or a capital level or an asset level or an ROI or an ROC, some specific objective you have in mind. We normally try to measure all of this in the end in terms of money, but this is what budget is all about. In that, the first major category of budget is fixed versus flexible budget. Now, what is fixed budget is flexible budget is a fixed budget is one which does not change with the production which you are doing. For example, I have an R&D budget. The R&D budget should not change because you have produced 5,000 units, 10,000 units, 15,000 units, or 20,000 units, because R&D budget has no linkage with what units you are producing. So certain budgets are fixed in nature, which does not change with whatever level of activity an organization is doing. If you produce more or if you produce less, this budget will not undergo change. Practically, organizations very rarely prepare a fixed budget and it will work only for few items. Flexible budget is one which I initially prepared a budget for 100 units, and it said I'll incur 1 lakh rupee. Now, at the end of the year, I spent only 80,000. I spent only 80,000. That does not mean I saved 20. That does not mean I saved 20, because what happened is you spent 80 but produced only 60 units. So then question will say prepare a flexible budget for 60 units. Prepare a flexible budget for 60 units. After you prepare a flexible budget for 60 units, then you can say whether you saved money or not saved money. And in order to do that, I have to categorize the cost into three: fixed cost, variable cost, and semi-variable cost. In this example, if entire amount is fixed, then for 60 units also budget is 1 lakh only. For 60 units also the budget is 1 lakh, or for 40 units also the budget is 1 lakh. If the entire amount is variable, then for 60 units the budget will be 60,000. And if it's semi-variable, I'll have to analyze it and prepare a budgeted amount. So I have three categories: fixed cost, which does not change with volume; variable cost, which is directly proportional to volume; and semi-variable cost may or may not change. In case I have data in the question, I can split the cost like this: change in cost by change in units. We have used it at other places also. So semi-variable component will come and you substitute in any one level. And you'll get to know what is the variable cost. Example: repairs and maintenance for 1,000 units is 4,000. 1,000 units is 4,000. 4,000 divided by 1,000 is 4 per unit. The cost would be 5,000 for 1,400 units. 5,000 for 1,400 units. Can you divide and tell me how much? 5,000 for 1,400. 3 point. So if the cost is not same at a per unit level, also not same at a overall level. If the question had said repairs and maintenance 1000 units 4000, 1400 also 4000, 2000 also 4000 because it's a fixed cost. It is a fixed cost. If you divide and you get 4 here as well as 4 there, then it is a variable cost. Then it is a variable. So this is semi variable. Change in cost is 1000. Change in cost is 1000. Change in units is 400. So variable component is 2.5. This 2.5 you can substitute for 1000 units or for 1400 units. Anywhere you substitute. For 1000 units, variable cost is 2500. Balance 1500 is fixed. Balance 1500 is fixed. So if I want to know what is the cost for 2000 units, 2000 into 2.5, 2000 into 2.5 and add the 1500, add the 1500 and this will give me what should be the power or repairs and maintenance cost for 2000 units. In this, in case there is any change in cost, any change in fixed cost means a change in total fixed cost, any change in variable cost means a change in variable cost per unit. Power cost of last year is 10 lakh. 80% was incurred on production. If you incur something on production, it is more like a variable cost. It's more like a variable cost. So 8 lakh I incurred on production and 2 lakh I incurred on employee quarters. Production doubled. If production double, the power cost will double for the production portion. The power cost will double because last year you sold 100 units, now 200 units. If 100 becomes 200, the power cost is obviously going to double. So 8 lakh will become 16 lakh. In case on the employee quarters, the question say more employees, less employee, anything is mentioned, take it. Nothing mentioned, 2 lakh remain, 2 lakh and put together now it is 18 lakh. Put together it is 18 lakh. Because production has doubled, variable cost will move in line with the production. Variable cost will move in line with the production. Clear? Any doubts on this? Factory overhead is 3,20,000 for 550 units. 3,60,000 for 650 units. Can you please tell me how much is the VC per unit and how much is the total fixed cost? First tell me these two. VC per unit, total fixed cost. VC is 400, total fixed substitute either in 650, exact 1 lakh. Okay, now the question says variable overhead will increase by 8%. Any change in variable cost means a change in variable cost per unit. So 400 plus 8% is 432. Fixed overhead will increase by 15%. Any change in fixed cost means a change in total fixed cost, means a change in total fixed cost. So 1 lakh plus 15% is 1 lakh 15. And now for 850 units, 850 into 432, 850 into 432 plus 1 lakh 15,000 plus 1 lakh 15,000. 4 lakh. Clear? Any doubts on this? This is the concept. You will have to see if they give you two levels. I did not divide and all check. Ideally, we should first divide the number and check are we getting the same amount. If you get the same amount, it is variable. If it's variable, then there's no headache. Just apply that on into 850. But you don't get the same number. Overall, also not same number. It is a fixed. It is a semi-variable cost which needs to be split. Certain other examples are there. You can see that later. Next is functional budget. So one is fixed versus flexible budget, and the next concept is functional budget. With this, the concepts are over. I'll only be doing questions, and I'll be doing some MCQs now, so that the full clarity is there. Functional budget is very simple. The most important functions in a business is sales, production, and purchase. These are the most important. Can I have anything else? Yes, it can be anything. So functional budget means budget for the various functions of a company. Every organization will first prepare a sales budget because that is what is the main thing which will decide everything else. If you are saying you will sell more, production guy has to then produce more. Production guy has to produce more. I am the production guy. I say I will produce more. Sales guy saying no, we cannot sell. then it doesn't work because I am dependent. Production is dependent on sales. Sales is also dependent on production, but the primary main person is always the sales guy. Main person is always the sales guy. So sales guy will say, I want to sell so many units. So first budget is sales budget. What you will do in sales budget is you have to write two items. Very simple. Quantity to be sold, selling price, value of sales. Particulars, it can be FG1, FG2, FG3, FG4, FG5, FG6. In this scenario, if they don't tell me the units, very rare scenario, I'll apply a formula. Sales to achieve desired profit is equal to desired profit plus fixed cost by contribution per unit. Desired profit plus fixed cost by contribution per unit. In that also, there can be a situation where you have multiple product. If you have multiple product, if you remember, we had a concept called composite PVR or contribution per set. Composite PVR or contribution per set. So the first budget is units sold, selling price, value of sales. Units sold will mostly be available in question. Otherwise, you do fixed cost plus desired profit divided by contribution per unit or contribution per set. If this is done from sales plus closing stock is equal to opening stock plus production. So opening stock, take it this side. Sales add closing stock less opening stock production. Less opening stock production with that into cost per unit, cost of production. If you have data, you can multiply with every budget is normally units as well as value unless the question tells. Some question will specifically say prepare sales quantity budget, which means they don't want the value. They don't want the value. Problem silent will try to do both. So production budget is sales, add closing stock, less opening stock, production, cost per unit, cost of production. When we did EOQ using production, we used to multiply with input by output. Production into input by output. That will give me raw material consumption budget. That will give me raw material consumption budget. In that, if you add purchase price or value of raw material, you will get value of raw material consumed. You will get value of raw material consumed. So production input output ratio, raw material consumed, and my raw material consumed is equal to opening stock plus purchase minus closing stock. So purchase is equal to raw material consumed plus closing stock minus opening stock multiply with the purchase price. You will get the value of purchases. You will get the value of purchases. This is what we had done in few questions in EOQ also. That's the order. Apart from this, production separately can give me manpower budget. What is manpower budget is how many employees do I need? How will I do? Production one side this side, I'll write a standard equation. 1 unit is equal to 2 hours, 5 unit is equal to 10 hours, whatever is the equation. You want to produce 1 lakh unit. 1 lakh unit means you need 2 lakh hours. You need 2 lakh hours. Then I get to know every employee can work for 200 hours in a month. Every employee can work for 200 hours in a month. 2 lakh divided by 200 is the number of employees needed. Is the number of employees needed. So it can give me a manpower budget which is continuation of budget 2, which is a continuation of budget 2. Production hours required per unit, total hours, working hours per employee, number of employees needed. Clear? Let's see certain examples. Variable cost per unit 1000, total fixed cost 20 lakh, estimated sales is 100 lakh with a profit margin of 20%, with a profit margin of 20%. Number of units to be sold by the company. Number of units to be sold by the company. This is given in a slightly different manner. My sales is 100 lakh. How much is the profit given here? Which is 20 lakh. Cost is equal to 20 lakh plus 1000 into number of units. Cost is equal to 20 lakh plus 1000 into number of units, and number of units will come. Number of units will come. They have given in a slightly different manner. 1000 into number of units. Get me that number of units. 20 plus 1000 into number of units is equal to 80 lakh. 20 lakh plus 1000 into number of units. 6000 units. Here the formula is not working, but they have given in a slightly different manner. This is like our normal cost sheet adjustment. Sales is 14,000. Stock increase by year end. What does stock increase by year end is closing stock minus the opening stock, closing stock minus the opening stock, and then there is a rejection. Then there is a rejection. See, listen, production is very simple. Production is equal to sales plus closing stock minus opening stock. Sales given is 14,000. Closing minus opening given in the question is 160. So I need only 160 units, but the problem is there is a rejection of how much? 4%. So if you produce 100, rejection is 4. You will get only 96. You will get only 96. That 96 is equal to 14,160. That 96 is equal to 14,160. 96 is equal to 14,160. What is 100? 14,750. This is giving effect to rejection. Like this, if this is picked from one of the question. I'm just quickly discussing different adjustments which can come. Let me know the production here. This is very simple. This is very simple, but you still may struggle. Try it. I want the production number. You try it. You may still struggle, but ठीक है. You may still find it little difficult, but give it a try. If you've got the answer, let me know. Okay, so very simple. Sales plus closing stock is equal to opening stock plus production. Sales is 48,000. Closing stock is 0.1 P, 0.1 production, 0.1 production. Opening stock is 3,900 plus P. 3,900 comes this side. You get 44,100 is equal to 0.9 P. 44,100 is equal to 0.9 of the production. 0.9 of the production. Production is 49,000. Clear? Any doubts on this? Next, opening stock is 20,000. Closing stock is equal to 4 days of sales. Closing stock is equal to 4 days of sales. And sales of 1 month, 25 days is 2,50,000. Please apply the formula. Opening stock plus production is equal to sales plus closing stock. Opening stock plus production is equal to sales plus closing stock. Opening stock plus production is equal to sales plus closing stock. Sales plus closing stock. What's the opening stock given in the question? 20,000. Production is what we are calculating. Sales is 2,70,000 and closing stock is 4 days of sales. 2,50,000 into 4 by 25 into 4 by 25, which is 40,000, and you get the remainder is 2,70,000. A company is manufacturing 1 lakh units of product A. Company is manufacturing 1 lakh. Listen, it's a very good problem. 1 lakh units of product A. It needs 2, 3, and 5 of X, Y, and Z. It needs 2, 3, 5 of X, Y, and Z. So I need 2 lakh, 3 lakh, 5 lakh. I need 2 lakh, 3 lakh, and 5 lakh of X, Y, and Z. Component Z is not available outside. So this is X, this is Y, and this is Z. Z is not available outside. Z is not available outside. 4 units of Y, 4 units of Y is needed to produce 1 unit of Z. 4 units of Y is needed to produce 1 unit of Z. How many units of Y are required by the company? How many units of Y are required by the company? Listen, I wanted 2 lakh, 3 lakh, 5 lakh. With this, it would have got over. But the question says Z, you cannot buy it from outside. You want to make it in the company. In order to make this, I need 20 lakh Y. I need 20 lakh Y because it says 4 units of Y. 4 units of Y is needed to produce 1 unit of component Z. 4 units of Y is needed to produce 1 unit of component Z. So put together, I need 3 lakh of Y for producing product A and another 20 lakh, of Y for producing product Z, and I need 23 lakh. This got tested as in one of the exam question. They ended up testing this in one question. So I need together how much? 23 lakh units. Opening stock 20,000, production 3 lakh, 1 unit. Okay, try this. Raw material purchased. Try this, I'll explain. You anyway try. You try it, I'll explain. I want raw material purchased. How much is raw material consumed? Consumed, tell me first. Production is 3 lakh. Raw material consumed is 3 lakh into input by output. 3 lakh into input by output. What is the input output ratio? 3 is to 1. 3 is to 1. So raw material consumed is 9 lakh, and 9 lakh is equal to opening stock plus purchase minus closing stock. So 9 lakh is equal to opening stock is how much in the question? 20,000. Purchase is what we are calculating, and closing stock is 10% of 9 lakh. Closing stock is 10% of 9 lakh, which is 90,000. Purchase balancing figure is 9 lakh 70,000. See, the rule is very simple. Sales will give you production, production will give you raw material consumption, and raw material consumption will give you raw material purchase. Standard time required to, this is a very good question. Standard time required to produce actual output is 80,000 hours. Is 80,000 hours. Target efficiency of worker is 80%. See, I told people you produce it, I'll give you 80,000 hours. But these guys are slightly inefficient. There was a formula I gave for efficiency when we did labor chapter. What is the formula for efficiency? What was the formula for efficiency there? Actual. One is on output based. I wanted the time based formula. One is output based. What was the time based formula? Is it actual time by standard time or standard time by actual time? I'll give you, see, the point is whenever you get confused, let's assume standard time is 10. Actual time is 12. Tell me, is it efficient, inefficient first? I gave you 10 hours to do a job. You took 12 hours. Inefficient. Formula will be 10 by 12. Formula will be 10 by 12 because I need a number which is lesser than 100% in this example. So efficiency is ST by 80. Efficiency is ST by 80. 80% is equal to 80% is equal to standard time is 80,000 divided by actual time, and actual time you will end up taking, it doesn't end here. It doesn't end here. You will take 1 lakh hours. See, in this 1 lakh hours, you are not wasting time. You are working. But you are not fully efficient. You are not fully efficient. You are doing your work. I'm taking classes, but I'm not able to complete it fully. The other option is I don't take class and sit idle. So they are not sitting idle. But on top of this, there'll be a non-productive downtime. There'll be a non-productive downtime, which is 20% of the hours worked. According to me, employees work for entire 1 lakh hours. Though output did not come, but they were working for entire 1 lakh hours. On top of this 1 lakh hour, another 20% is downtime. 20% is downtime where nothing is happening, So 1 lakh plus another 20%, 1 lakh 20,000, 1 lakh 20,000. This took the help of the labor chapter. So that is where the interlinkages is very, very critical. Every chapter like this will keep having interlinkage. A company plans to produce 1 lakh units of X in April. It needs 2 hours to produce 1 unit. It needs 2 hours to produce 1 unit. So as I read, I get to know I need 2 lakh hours. I need 2 lakh hours. I have 1,000 employee and they can work for how many hours? 160 hours. So 1,000 employee can work only for 160 hours, which means my employee can work for, but I need how many hours? 2 lakh hours. Then they are saying overtime is possible. Overtime is possible, but you have to pay how much? 50% extra. Overtime means you have to pay 50% extra. So of the 2 lakh hours, 1 lakh 60,000 normal working, but 40,000 will be overtime working. Normal 20 rupees per hour. Overtime 30 rupees per hour. Overtime is 30 rupees per hour. I would want to avoid overtime, because overtime unnecessarily takes away what? Extra cost. 1 lakh 60,000 into 20 plus 40,000 into 30 plus 40,000 into 30, 40 lakh. Okay, so now we are now going to get into proper problem solving. I have discussed major chunk of the MCQ around this chapter had very limited number of questions, so I thought I'll discuss all the MCQs itself. We have kind of done. Now we will do proper questions where I will do few questions on flexible budget, few on functional budget. Let's come to question 1, page 158. Flexible budget. Action plan manufacturers normally produce 8,000 units of their product in a month in their machine shop. 8,000 units I normally produce. For the month of January, I had planned for 10,000 units. Owing to a sudden cancellation of a contract in the middle of January, we could produce only 6,000 units. My normal month is 8,000 units. January I planned for 10,000 units, but in reality, I could produce only 6,000 units. Indirect manufacturing costs are carefully planned and monitored in the machine shop. Foreman is the person in charge of the manufacturing. He will be paid a bonus of 10%. 10% if there is a saving in cost. If there is a savings in cost. Foreman is saying, please pay me a bonus of 88.5. How did 88.5 come? I'll explain as we proceed. He has asked for a bonus of 88.5. Basically, he feels we have saved money. Works manager wonders, how can anyone claim a bonus when the company has lost a sizable contract? Works manager is not very clear. Why is this guy asking for a bonus? Because we have lost one major contract. Now his working is very simple. This is a normal month. Normal month is 8,000 units. Normal month is 8,000. January is 10,000. And reality is, what he did is 5875 minus 4990. Do 5875 minus 4990 into 10%. He said, pay me bonus. Into 10%, he pay me bonus. This is what this guy is saying. Now, this guy may be right also, may be wrong also. That I have to analyze. Problem here is, this is a 8,000 units. This is a 10,000 units, and January actual is 6,000 units. So I first need a budget for 6,000 units. I need a budget for 6,000. This is a budget. This is also a budget. I need a budget for 6,000. and that 6,000 could be more than 4990, less than 4990. I'm not commenting on it, but I need a budget for 6,000. How will we prepare a budget? We are going to look at the various items which are there and decide whether they are fixed, variable, or semi variable. For example, 1,000. Don't look at the actual. Don't look at the actual. So I'm going to do the budget. You are just going to be in listen mode. We are going to do the budget. Both are 1,000. So 6,000 also 1,000. 6,000 also 1,000. 720 and 900. 720 and 900. Do 720 divided by 8,000. 900 divided by 10,000. Exact same amount are you getting? 720 by 8,000. 900 exact. No rounding off also. What is the exact number you got? 0.09. Multiply that with 6,000 now. Multiply that with 6,000. 540. Then 800 by 8,000. 1,000 by 10,000. This is 8,000. I'm not even looking at the actual. 800 by 8,000. 1,000 by 10,000. Are you getting exact same number? Multiply now with 6,000. 600 by 8,000. 650 by 10,000. Exact same number. Semi-variable, I'll discuss in some time. Semi-variable means you'll have to split into variable and fixed and then get the cost for 6,000 units. 800 by 8,000, 875 by 10,000. No, leave it. These two, leave it. 320 by 8,000 and 400 by 10,000. Multiply with 6,000. Rates and taxes, no division needed because overall same. So I'll write same 150. Same 150. 800, 800, same 800. 100, 100, same 100. So this is fixed, this is fixed, this is fixed, variable, 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 and fixed. Two items semi-variable we'll have to evaluate. Two items semi-variable we'll have to evaluate. Any doubts till this? Now write note 1, repairs and maintenance cost. Repairs and maintenance cost, please write. Note 1, repairs and maintenance cost. We are not doing the entire question, but let's do this. Note 1, repairs and maintenance cost. 8,000 units, rupees 600. 8,000 rupees 600. 10,000 rupees 650. You should not look at actual data. Actual is of no use. Actual is of no use. Now, VC per unit is change in cost by change in units. Variable cost per unit is equal to change in cost divided by change in units. 50 rupees by 2,000. 50 rupees by 2,000. Change in cost by change in units. You may get a very insignificant number, whatever it is. 50 by 2,000. 0. This is the variable component. 0.025 is the variable component. Whatever number you get, you may get a very insignificant number, but that's okay. Any doubts on 0.025? I substitute that in either 8,000 or 10,000. So 8,000 into 0.025 is variable. Balance is fixed. Tell me 8,000. So this 600 broken down into 2. 600 broken down into 2. Variable, fixed. Variable is 8,000 into 0.025. Fixed is balancing figure. 8,000 into 0.025. Fixed balancing figure is 400. Now tell me what will be the cost for 6,000 units. What will be the cost for 6,000 units? Semi-variable cost for any doubts on 0.025 and this number 400. So cost for 6K is equal to 400 plus 6,000 into multiply and tell me the final. Clear? Any doubts on this? So once I divide, I don't get the same number. It is a semi-variable cost. If overall is same, no need to divide also. No need to divide. If overall is same, no need to divide. Any doubts on 550? Any doubts on 550 number? Clear? Can you proceed? Similarly, I'll be analyzing power. I don't want to analyze it. Same calculation. It will turn out to be 725. It will turn out to be 725. And listen, I'm kind of done. My budget for 6,000 units is 4705. For 6,000 units is 4705. Actual is 4990, no bonus. Actual is 4990, no bonus. Budget is 4705. Actual is 4990. Bonus is not payable. Bonus is not payable. This is evaluating comparing 6,000 and 8,000. Any doubts on this? Okay, similar requirement here. Triple P Limited is currently operating at 80% of the capacity, producing 80,000 unit. Whenever you read the question, please read it with proper attention. 80% is 80,000, which means 1 lakh unit is the capacity, which means 1 lakh units is the capacity. You are going to do it along with me. For the past 2 years, production is increasing by 10%, increasing by 10%, which means current year is 80%, previous year is 70%, previous to previous year is 60%. 60, 70 and 80 are 60,000, 70,000, 80,000. What is the use? I will take two numbers, divide, same number, variable. Overall same, fixed. Overall same is fixed. None of them is same. Change in cost divided by change in units. 3 levels they have given. I don't need 3 levels. I just need 2 levels. But they have given 3 levels. We'll analyze. We'll take any of the 2. So for all my analysis purpose, year 3 is ignored. Okay. Year 3 I'm removing it from the question. Company is planning now for 90% capacity. So next they would want, technically when you read it fully, they'll say prepare a budget for 90,000 units. Prepare a budget for 90,000 units. Due to increase in demand of the raw material, distributor will increase the price by any change in material cost if it's variable. I assume it is going to be variable. If it is variable, would mean change in material cost per unit. Would mean change in material cost per unit. At the beginning of the current year, dispute occurred between workers. Workers and employees. Later on, they settled for a 20% increase in wages. So material cost will increase by 10%, wages cost will increase by 20%, variable factory overhead will increase by 5%, variable selling, indirectly they are telling the factory overhead will have a variable as well as a fixed component, which is semi-variable in nature, and fixed factory, fixed selling overhead, admin overhead will increase by 15%. When we evaluate, very simple, our rule is very simple. Any change in variable cost means a change in variable cost per unit. Any change in fixed cost means a change in total fixed cost. Profit is 25% of total cost. You are required to prepare a flexible budget at 90%. And they say also ascertain profit and contribution. Because they've asked contribution, I'll write only 2 category of cost. Fixed cost, variable, no semi-variable. What will we do for semi-variable? Whatever you identify, right? Half in fixed, half means whatever is the amount in fixed and whatever is the amount in variable. Because contribution means sales less variable cost. Sales less variable cost. So I'll repeat from the beginning. They have given 60, 70, 80 and I have to prepare 90. I have to prepare 90, giving effect to 10% change, 20% change, 5% change, 10% change, all that is there. First, direct material. Ignore year 1 which is given, okay? So that ignore year 3. Ignore year 3. Divide by 70,000 and 80,000. Tell me, are you getting same amount? Divide by 70,000 and 80,000. 70,000 units, 80,000 units. 14 lakh by 70,000, 16 lakh by 80,000. What number are you getting? 20. Now let's start, right? flexible budget, flexible budget, right? Flexible budget for 90% capacity in bracket 90,000 units. For 90% capacity in bracket 90,000 units. Particulars, calculation, amount. Variable cost, variable cost, variable cost. First item is direct material, direct material. They gave three levels. Three is of no use, only two I need. 20 rupees you told me. 20 plus there's an increase of cost of 10% from next year. There's an increase in cost of 10 percentage from next year. So 20 plus 10% into 90,000. Any change in cost means a change in cost per unit. 20 plus 10% into 90,000. 19 lakh 80,000. Can you divide direct labor and check are you getting per unit same number? Divide and check are you getting same number? Same number. How much is that? 10. Direct labor 10, 10 plus 10 plus 20% increase into 90,000. 12 into 90. 10 lakh 80,000. A very simple concept as long as you're able to divide it properly and check it. Divide 340 and 360, 70,000, 80,000. Exact same number are you getting? 340, 360. No, which means it is a semi-variable cost, which means it is a, and anyway the question has indirectly told me variable factory overhead 5% increase, fixed factory overhead 10% increase. So question has indirectly told me it is a semi-variable cost. Leave some 10, 12 lines. VC per unit is equal to change in cost by change in units. Change in cost by change in units. VC per unit is equal to change in cost by change in units. Year 3, I'm not even looking at in the question. I'm ignoring that first column. Second and third column alone, I'm focusing on. 360 minus 340 divided by 80 minus 70. We get 2 rupees. Substitute this 2 rupees either in 70% or 80% and tell me the fixed component. 70 or 80 and tell me the fixed component. Fixed component is 2 lakh. Any doubts on this? Any one level you can substitute. No need to substitute even at both the level. Any one level you substitute, you will get to know the fixed component. Now very simple. Factory overhead 2 rupees. 2 rupees plus 2 rupees plus 5% increase. Any change in variable cost means a change in variable cost per unit. 5% increase into 90,000. And leave some 4-5 lines. Fixed cost. Fixed cost. That will also have factory overhead. Fixed cost will also have factory overhead. Fixed cost will also have factory overhead. And this one, I have my 2 lakh rupees, which will go up by 10%. 2 lakh rupees will go up by 10%, which is mentioned here. There is an increase of 10%. 2 lakh rupees will increase by 10%. Any doubts on this? Selling overhead, give me the two numbers, VC per unit and total fixed cost. Selling overhead, how much is the variable component, how much is the fixed component? Selling overhead, how much is the variable component and how much is the fixed component? Variable component is 4 rupees per unit. Variable component is 4 rupees per unit. Fixed component 1 lakh. Variable is 4 rupees and fixed is 1 lakh. Now, selling overhead 4 plus 4 plus, there's an increase of 10%. There's an increase of 10%. 4 plus 10% into 90,000. And again, I write selling overhead 1 lakh plus 1 lakh plus 15%. 1 lakh plus 15%. 1 lakh 15,000. 1 lakh plus 15%. These are very simple questions. Keep coming in exam. As long as you are having grip on the concept, you'll be able to handle it. 1 lakh 15,000. Any doubts on this? Next is admin overhead is 160, 160, 160 fixed. It will increase by how much? 15%. Admin overhead 160 plus 15%. Total variable cost total fixed cost total cost add profit and sales. Total cost add profit and sales. Profit margin in the question is 25% on cost. They've also asked for contribution. Contribution is sales minus variable cost. Sales minus variable cost. That's why I segregated variable and fixed separately, because they wanted contribution to be calculated. Contribution has to be calculated. So we have segregated separately fixed cost and separately variable cost. Contribution is sales minus the variable cost. Minus the variable cost. This is a usual exam question on the flexible budget side. Changes in cost structure. Any doubts on this? Can you proceed? Any doubts on this? Now, another variant of this is like this. You are given the following data of a manufacturing concern: variable expense, material, labor, others. Question is very clear. It is a variable cost. It is a variable cost. Semi-variable expense. Semi-variable expense again at 50% capacity. Fixed expense they have not given in bracket. Doesn't matter. Fixed expense remains same. Whatever be the capacity. Fixed expenses will remain same for all levels of production. Will remain same for all levels of production. Semi variable expense will remain constant between 45 and 65. The question is given for 50%. From 50 till 65, no change. It will increase by 10%. It will increase by 10% if you go between 65 and 80, and it will increase by 20%. It will increase by 20% between 80 and 100. Sales at various level. Prepare flexible budget at 75% and 100%. No need to do. You be in lesson mode. Very simple question. Only thing is units is not given. 100% equal to 100 units. 100% equal to 100 units. 75% is equal to 75 units. 50% is equal to 50 units. First, all these are for 50 units. All these are for 50 units. Divide by 50, you will get the per unit number. Multiply with 75, multiply with 100. Divide by 48 lakh, divide by 50. 48 lakh, divide by 50. Into 75 equal to 100 equal to no change in cost structure, nothing is there. If that said material cost is increasing by 10%, whatever number you got, you will have to add that. 51 lakh 20 divided by 50 into 75 equal to 100 equal to 1 crore. 7 lakh 60 divide by 50 into 75 equal to 100 equal to total and all. I'm not bothered. Then comes semi-variable expense. For semi-variable expense, they've said whatever you have given at 50 remains same between 45 to 65. I need it for 75 and 100. I need it for 75 and 100. For that, they've said it will increase by 10% and then it will increase by 20%. In this question, you cannot do change in cost by change in units. All that is not possible because for doing that, I need two levels. They have not given all that in the question. Only thing they have told is you can add 10% if you're doing a 75% budget and add 20% if you're doing a 100% budget. Beyond this, I cannot do anything else. I cannot do anything else. So what I will do, I will add 5 lakh plus 10%, 5 lakh, 50, and other side we will add 20%, 10% addition, 20% addition, 10% addition, 20% addition, and fixed copy paste. The total will come, total cost, profit is balancing figure, sales is given in the question. Sales is given in the question. Again, fairly simple, straightforward question. Only thing is they did not give units. You can work with percentage also, but I normally prefer taking it as 100 units. Taking it as 100 units. That's what the solution will be. 75 units, 100 units. So I divided by per unit into 75 into 75 into 75 into 100 into 100 and into 100. In this question, if they ask me contribution, I cannot calculate because I don't know what is the fixed component in semi-variable, what is the variable component in semi-variable. In order to do that, you have to give me two levels. For example, assuming question had given like this, then I would have followed a formula change in cost by change in units. If question had given this, we would have followed a formula called change in cost by change in units and got some numbers and accordingly worked with it. Here I can't do anything. I got my total cost. There is a loss and there is a profit. Any doubts on this? So here units were not given. I assume units is 100 and proceed. Some question what they will do is they will not make any changes in the question. The only thing they will do is direct material 10, direct labor 20, factory overhead 10. Like this, they'll keep mentioning, and in bracket, they will say this is 30% fixed. This budget was done for 20,000 units. The budget is given for 20,000 units, and they'll ask you to prepare it for 30,000. When they ask you to prepare for 30,000, 30,000 into 10 is okay, 30,000 into 20 is also okay, and in the factory overhead, variable 30,000 into 7 is okay. Fixed, that 3 rupees is there, no, that is incorrect number because fixed cost per unit is always misleading. First, I will multiply that 3 with 20,000. I'll multiply that 3 with 20,000 and copy paste the same 60,000, whether you ask for 30,000 units, 40,000 units, 50,000 units. Copy paste the same number. Copy paste the same number because if they are given 10 rupees and they mention 70% variable, 30% something they mention, variable, please take the per unit number. Fixed, always find the total number. Fixed, always find the total number. Many students make this mistake because they are in a hurry. They see 3 rupees and then multiply with 30,000 units. Entire solution will go wrong. Entire solution will go wrong. Any question, I don't want the two misleading number. The first misleading number is total variable cost. I don't like it. I want VC per unit, and second misleading number is FC per unit. I don't want. I want total fixed cost. Clear? Any doubts on this? Okay, this is again a slightly different question. I'll first read it. Maybe I'll give you time to solve certain part of it. A factory is currently working at 60% capacity, produces, which means full capacity is 20,000. Full capacity is 20,000. 12,000 divided by 60%. Management is thinking to increase the capacity either to 70 or 90. 70 or 90. I'll increase my capacity to 70% or 90%. 70% is 14,000 units. 90% is 18,000 units. At both level, I'll be able to sell all the units. Certain changes. At 70%, cost of raw material will increase by 4%. Any change in raw material cost would ideally mean change in raw material cost per unit, and selling price will fall by 3%. Selling price will fall by 3%. At 90%, raw material cost will increase by 5% and selling price will fall by 4%. Today, my product cost is 360 and selling price is 400. So whatever changes in selling price is given, you apply on 400. Whatever changes on raw material, not on 360, there is a further breakup. There is a further breakup. Material cost is 200. If nothing is given, material is a variable cost. If nothing is given, material is a variable cost. If nothing is given, labor is a variable cost. Factory overhead 60 in bracket what? Like I showed you some time back, I said they may give something in bracket 50% fixed, which means 30 is variable. 30 is not fixed. 30 is not the right number. You have to multiply with the number of units and write the number. You'll have to multiply with the number of units and then write the number, or at least in your mind you should think that you have to multiply with the whatever. Today we are operating at 12,000 units. Today we are operating. If you tell me 14,000 units or 16,000 units or 18,000 units, whatever be it, fixed cost first I'll convert into total and then I'll do whatever the requirement is. Admin and selling overhead 40 in bracket what? 60% fixed. 40 in bracket 60% fixed. So 60% fixed would mean 24 is fixed, which is incorrect. Fixed 24 is incorrect for us. Why it is incorrect? Because I don't need the per unit number. I don't need the per unit number. Variable is 16. On top of all of this, there is an extra advertising cost if you sell above what? 80% capacity. If you go above 80%, they want us to calculate what is the profit if factory works at 60, 70, 90. 60 question almost given. I'm not going to do it. 70 also I don't want to do it. I just want you to do 90%. I want you to do only 90%. Listen, what you will do, particulars, calculation and 90% capacity. 90% capacity. I'll give you around 10 minutes. Please start doing it. 10 minutes for you. 10 minutes for you to do this. So, more or less a straightforward question. I wanted it for 90% capacity, which is basically 18,000 units. 90% capacity is 18,000 units. Material cost is 18,000 into 210. 18,000 into 210. Labor cost is 18,000 into 60. Variable factory overhead is 18,000 into 30 and fixed factory overhead is 12,000 into 30. 12,000 into 30. Administrative and selling overhead 18,000 into 16 and 12,000 into 24, and in that you can add another 20,000, or you can write a separate item called advertising cost, a separate item. And sales is 18,000 into 400 minus 4%, which is 384. 384. Any doubts in this? Kind of a straightforward question. I make a profit of 556, so this is the best level. They wanted us to analyze the best level. Anyway, if you had done the full question, you would have analyzed which is the best level. Clear? Any doubts on this? Wherever possible, I'll try to split between variable and fixed. Not possible, then we'll go in the normal analysis. Any doubts on this? Okay, first type of questions are over, which is fixed versus flexible budget or primarily flexible budget question. 4 questions which I have done more than sufficient to understand the concept properly. Exam question, something here and there comes, you'll have to handle it. You can practice extra questions from your study material if you want, not from my question bank that will have more questions. 4 questions is more than sufficient as far as this segment is concerned. Now, second is the functional budget. Functional budget is the order alone you'll have to again remember. We start with sales. From sales, we get production. From production, we get raw material consumption. And from raw material consumption, we get the raw material purchase. A single product company estimated its sales for the next year quarter wise. So sales is given in the question, which means sales budget is over. Sales budget is over. They have given quarter wise. Opening stock is 10,000 and company wants to maintain a closing stock of 16,250. Company wants to maintain a closing stock of 16,250. Listen, sales plus closing stock is equal to opening stock plus production. I'll read it fully. I may need extra data point, but as I'm reading, I'm explaining. Sales plus closing stock is equal to opening stock plus production. Sales, can you tell me the 4 quarters put together? What is the sales of the 4 quarters put together? 153. Closing stock is 16,250. Opening stock is 10,000. Production is balancing figure. Opening stock 1,60,000. That's the production for the year. Production pattern in each quarter. The production pattern, I think they may need a quarterly budget. Production pattern in each quarter is 80% of the sales of the current quarter and 20% of the sales of the next quarter. So production is not sales plus closing stock minus opening stock. Production is equal to 80% of Q1 for Q1 plus 20% of Q2 sales. 80% of Q1 sales plus 20% of Q2 sales. Opening stock of raw material is 10,000. Closing stock is 5,000. Each unit requires 2 kg of raw material. Annual production into input by output is annual raw material consumed. Raw material consumed is equal to opening stock plus purchase minus closing stock. Opening stock plus purchase minus closing stock, that will give me annual purchases. That will technically give the annual purchases. Company proposes whatever annual you calculate, purchase the entire annual requirement in the first 3 quarters. In the first 3 quarters, 30% in the first quarter, 50% in the second quarter, and 20% in the third quarter. Nothing in the fourth quarter. Nothing in the fourth quarter. Value of the opening stock at the beginning of the year is 20,000. They need a production budget heading quarter wise in units. In units, value is not asked. Value is not asked. Raw material consumption budget again in quantity. Raw material consumption budget in quantity. Consumption budget is very simple. Whatever production you get into input by output. Into input by output. Then raw material purchase budget. Purchase budget is whatever annual number I get. 30% in Q1, 50% in Q2, 20% in Q3. And last budget is price stores ledger, which I am not going to do. Price stores ledger is whatever you will be writing date, particulars, receipt, quantity, rate, amount, issue, quantity, rate and amount, balance, quantity, rate and amount, which they want us to follow first in, first out method. Let's start. Working note 1. Production budget. Production budget, right? Production budget. Particulars Q1, Q2, Q3 and Q4. Particulars and 4 quarters. Particulars and 4 quarters. Normally production is sales plus closing minus opening. But here production is 80% of current quarter sales, 20% of next quarter sales, total production. 80% of current quarter, 20% of next quarter, and I get my production number. I get the production number. Where you will face one challenge. When you face that challenge, I'll explain. Now coming to the calculation, Q1. 30,000 into 80%. 30,000 into 80%. Q2, 37,500 into 80%. Q3, 41,250 into 80%. And 45,000 into 80%. 80% of the current quarter. 80% of the current quarter. Next is 20% of the next quarter. For Q1, the next quarter is Q2. For Q1, the next quarter is quarter 2, 37,500 into 20%. 37,500 into 20%. 41,250 into 20%. 45,000 into 20%. Next quarter number multiplied with 20%. Next quarter number multiplied with 20%. Now for Q4, I need the next year sales. I need the next year. I cannot take the last year Q1, which is where this will help me. This will give me annual production. This will give me annual production. Q1 you calculated, Q2 you calculated, Q3 you calculated, Q4 balancing figure. Q4 is balancing figure. So you will write this below this table and get the overall production. Get the overall production. In that Q1 I know, Q2 I know, Q3 I know, Q4 is balancing figure. So below this question or below the table, write sales plus closing stock is equal to opening stock plus production. Sales plus closing stock is equal to opening stock plus production. Sales plus closing is equal to opening stock plus production. What's the production number we are getting? Annual 1,60,000. 1,60,000 is the overall production. Now Q1 put a total, Q2 total, Q3 total. Q1, Q2 and Q3 total. Q4 is 160 minus the 3 quarters. 160 minus the 3 quarters. This is balancing figure. This also is balancing figure. Even if you write it, don't write it, doesn't really matter. This is my production budget. This is the production budget. Sales plus closing stock minus opening stock is what ideally I will do, but I did it for the year. I did it for the year. Quarter wise, we have followed this logic. Any doubts on this? I can continue with the same format, but in exam that is not possible. We will write again working note 2, raw material consumption budget. Working note 2, raw material consumption budget. Separate budget I have to tell. And the separate is of technically no use. I can copy paste the earlier line. Start with production. Raw material consumption budget, start with production. Start with production. We're going to start with production. On the production, I'll follow what I did in EOQ, production into input by output ratio, into input by output ratio. So next line item, input output ratio, input output ratio, input output ratio. Somewhere the question has mentioned that to produce 1 unit of finished output, to produce 1 unit of finished output, we need what? 2 kgs of raw material. We need 2 kgs of raw material. So 2 is to 1. 2 is to 1. Clear? This will give me raw material consumed. This will give me raw material consumed quarter wise. Then I have to go to raw material purchases. Raw material consumed 31,500 into 2 by 1. 38 250 into 2 by 1, 42,000 into 2 by 1, 48 250 into 2 by 1. This is raw material consumption budget. Now for raw material purchase also, ideal situation what will happen is I'll have raw material consumed, I'll add closing stock, deduct opening stock. But here they have not said that way. They have told quarter one 30% of full year purchase, quarter two 50% of full year purchase, and quarter three 20% of full year purchase. First, let's get the full year purchase using that logic. Raw material consumed is equal to opening stock plus purchase minus closing stock. Any doubts till this? Now, working note 3, raw material purchase budget. Raw material purchase budget. Raw material purchase budget. Raw material consumed is equal to opening stock plus purchases minus closing stock. Opening stock plus purchases minus closing stock. Technically, purchases is consumed plus closing minus opening. Consumed plus closing minus opening. 4 quarters put together, how many units are we consuming? 4 quarters put together. 3 lakh. Read the question. What is the opening stock in kgs? Opening stock in kgs, closing stock in kgs. Opening stock is 10,000 kg of raw material and closing stock is 5,000 kg of raw material. The opening stock of raw material is 10,000 kg and the closing stock at the end of the year is required to be maintained at 5,000 kg. So opening is 10,000, closing is 5,000. 10,000 plus purchases minus 5,000. Purchases balancing figure. 3 lakh 15,000 kg. Now this 315 Q1 30%, Q2 50%, Q3 20%. These two budgets, units and quantity, but purchase they've asked quantity as well as value because this is given 2, 3 and 4. 2, 3 and 4. Any doubts till this? Particulars and 3 quarters. Particulars Q1, Q2 and Q3. Particulars and 3 quarters. Quantity purchased. Quantity purchased. Quantity purchased. 3,15,000 into 30%. 3,15,000 into 30%. 3,15,000 into 50%. 30%, 50% and 20%. 30, 50 and 20. Quantity purchased. Purchase price. Value of purchases. Purchase price and value of purchases. Purchase prices 2, 3 and 4 and I get the value. Others I did not get the value part. It was not asked. Even if silent, we have to do both. But here, this is very clear. Units, quantity, and this is units and value. Quantity and value. 2, 3 and 4. This is the overall approach. Let me know if there are any doubts here. Any doubts on this? Last part, which I'm not doing, but I would want you to do it at home so that you get clarity on this. This I did not even do when I did materials area also. I wanted. So what will happen? Q1 purchase will be there. Q1 consumption. What is Q1 consumption? It will come from your raw material consumption budget. Q2 purchase, Q2 consumption, Q3 purchase, Q3 consumption, and Q4 only consumption. Q4 only consumption. Okay, let's come to 6. A company is engaged in the manufacturing of specialized sub-assembly required for certain electronic equipment. Company envisages, this is a very good problem, in the forthcoming month, the sales will take in the pattern in the ratio of 3 is to 4 is to 2. My sales will happen in the ratio of 3 is to 4 is to 2. The following is the schedule of components. Components is basically raw material. I have multiple raw material here. There's a baseboard, IC08, IC12, IC26. Four different raw material is there. There is a baseboard, IC8, IC12, and IC26, and three different finished product, ACB, MCB, and DP. Direct labor and variable overhead. Direct labor and variable overhead required for each of the sub-assemblies. This is the variable overhead, and this is the labor requirement, and the rate per hour is given. Rate per hour is given. Laborer works for 8 hours a day for 25 days a month. Opening stock of sub-assembly. This is my opening stock of finished product, and this is my opening stock of raw material. Opening stock of raw material. Fixed overheads is 757,200 for the month. Fixed overhead is 757,200 for the month, and monthly profit is sales to achieve desired profit. Sales to achieve desired profit. Desired profit plus fixed cost divided by contribution per unit. But I have three products. So I'll have to go with contribution per set. I'll have to go with contribution per set, because when we have multiple product, we will say one set contains 3 units of first product, 4 units of second product, and 2 units of the third product. Whatever I'm going to do in this 3 is to 4 is to 2, all that calculation, that is marginal costing. That has nothing to do with budgets and budgetary control. Question says, company wants a reduction of closing inventory by 10%. Closing inventory has to go down. First requirement, sales budget in quantity and value. Last problem, sales budget was given. The first requirement itself is I have to calculate what? Sales budget, quantity as well as value. Production budget is very simple. Sales, when you calculate, add closing stock, deduct opening stock. Opening stock is given in the question. Closing stock is 10% less than opening stock. Closing stock is 10%. Component usage budget. Component usage budget is raw material consumption budget. Component purchase budget is raw material purchase budget and manpower budget. So all 5 budgets have been asked here. Very good problem. First thing I have to do, which we are not going to do, is calculate contribution per unit of every product. How will we calculate? 520 minus 1 into 60 is the raw material cost. 1 into 60. 8 into 20. 8 into 20 is the second raw material cost. 4 into 12, third raw material cost. 2 into 8, fourth raw material cost. 36 rupees variable overhead. Labor 8 into 5 and 16 into 4. Like this, you will have to do contribution per unit for 3 products, which itself will take away at least 5 minutes or at least 3-4 minutes in exam. Assuming I have those numbers in the question, because I don't want to spend time, which is 96, 130 and 62. Now, I want to prepare sales budget. Beyond this, you will do along with me. Formula sales to achieve desired profit. Formula says desired profit plus fixed cost by contribution per unit. When I ask contribution per unit, you give me 3 answers. Product 1 96, product 2 130, and product 3 is 62, which is where we had a concept called composite contribution or composite PVR. Contribution per set concept was there whenever we have multiple product. Now, beyond this, assuming you have done 96, 130 and 62, you will write along with me. Now, write. Let us assume one set, right. Let us assume one set contains 3 units of ACB, 4 units of MCB, and 2 units of DP. Let us assume one set contains 3, 4 and 2. Contribution per set is equal to contribution per set is equal to contribution per set is equal to 3 into, assuming you have these numbers, 3 into 96, 4 into 130, 2 into 62, 2 into 62. What's the contribution per set you get? Sorry, what's the number? 9. So what marginal costing says is, you don't look at as three different products. You are selling only one product. What is the name of the product? ACB, MCB, DP. That's the product name. That's the product name. And in that you have 3 ACB, 4 MCB and 2 DP. Now right, sales to achieve desired profit is equal to sales to achieve desired profit is equal to desired profit plus fixed cost by contribution per set. Desired profit plus fixed cost divided by contribution per set. Contribution per set. The desired profit given in the question is, I want a monthly profit of 12 lakh and monthly fixed cost. Both are monthly. Both are monthly. So I can add them. 12 lakh, 757, 200. 12 lakh and 757, 200 divided by 932. Earlier we had three different number. Now we have only one number. 932. 2000. This answer will not help. This is just a calculation. Finally, what units I have to sell? ACB is 2100 into 3. It's not splitting in the ratio. Why into 3? Because one set has 3 units of ACB. One set has 3 units of ACB. So 2100 into 3, 6300. Then 2100 into 4, 8400. And 2100 into 2, 4200. Last question, units was directly given. This question, units is not directly. The sale units is not directly given. Any doubts on this? Sales to achieve desired profit formula. Now, once this is done, they want sales budget in quantity and value. Basically, you will have to present it like this. I'm not doing that part and all. Basically, your budget will look like this. Units to be sold, selling price, value of sales. Units to be sold, selling price, value of sales. This is first requirement of the question, which is sales budget. Now, using the sales budget, I'll decide the production budget. I'll decide the production budget. Next working note, production budget. Next working note, production budget. Particulars, 3 product. ACB, MCB and DP. Particulars in 3 products. ACB, MCB and DP. Sales, add closing, less opening. Sales, add closing, less opening is production. Sales 6300, 8400, 4200. Add closing stock, less opening stock. Add closing and less opening. Opening is given in the question. Closing is 10% less than opening. That is what the question has said. So opening given in the question is 800, 1200 and 2800. 800, 1200 and 2800, and closing stock is 10% reduction. The company is eager for a reduction of closing inventory of subassembly and component by 10% as compared to what? As compared to the opening stock. As compared to the opening stock, I want a reduction of 10%. So closing is 800, 1200, sorry, opening is 800, 1200 and 2800. 800, 1200 and 2800. 800, 1200 and 2800. And my closing stock is 10% less than this. Closing stock is 10% less, which is 720, 1080, 2520. Let me know the production number. 6220, 8280. Production, they have asked only quantity. If you read the question, it says only quantity is needed. From this, I have to go to now raw material consumption budget. Raw material consumption. See, sales and production budget, the heading will be finished product. The heading will be finished product. But when you do raw material budget, the heading will be baseboard, IC8, IC12 and IC26, because they are the raw material. They are the raw material. In this question, I have 3 finished product and 4 raw material. So how are we going to do? You'll understand. I am going to do it for particulars, baseboard and IC08. 12 and 26 I am not doing, but the same calculation will work. 12 and 26, the same calculation you will have to do. So particulars and 2 columns, baseboard and IC08. Particulars. You can have space for doing 2 more columns later if you want. Particulars, baseboard and IC08. Now, the formula remains the same, production into input by output, but there is one challenge. The challenge is I have multiple products. So, listen, what we will write, listen, for ACB, you will write production, input, output, RM consumed. Then for MCB, again, production, listen, you can write it in a minute. Listen, production, input, output, raw material consumed. Then for DP, production, input, output, raw material consumed, and I'll add the 3 raw material consumed. I'll add the 3 raw material consumed. That will give me total raw material consumed. That will give me total raw material consumed. So first I'll have to do ACB, then I'll have to do MCB, then I'll have to do DP, any number of products. So right for ACB, right for ACB, production, input, output ratio, raw material consumed. Production, input, output ratio, and raw material consumed. What is the production of ACB? Same 6220 for both. Same 6220 for both. Now, in the question, when I read here, following is the schedule of components. The input output ratio between baseboard and ACB is 1:1. One baseboard, one ACB. And IC08 is 8:1. 8:1. 8 units are needed to produce 1 unit. For baseboard, it is 1:1. For IC08, it is 8:1. IC12, 4:1. IC26, 2:1. Wait for a minute. Then for MCB, 1:1, 2:1, 10:1, 6:1. For DP, 1:1, 2:1, 4:1, 8:1. So my input output ratio is right, 1:1 and 8:1. 1:1 and 8:1. So 6220 into 1 and 6220 into 8 by 1. 8 by 1. 1:1, 8:1. MCB, what is the production? 8280. Again I'll have to write an input output ratio. Again I'll have to write a input output ratio, that is between MCB and baseboard, between MCB and IC08, between MCB and IC12, between MCB and IC26. Like this it will keep going on like this. Multiple products, you will have to repeat it 2-3 times. So the input output for MCB and baseboard is 1 is to 1, 2 is to 1, 1 is to 1 and 2 is to 1. 8280, 8280 into 2 by 1. 8280 into 1 by 1, 8280 into 2 by 1. DP, what is the production? 3920. Input output ratios again 1 is to 1, 2 is to 1, 1 is to 1 and 2 is to 1. 1 is to 1 and 2 is to 1. Total RM consumed in bracket quantity. Add up the three quantities for ACB, MCB and DP. For the ACB requirement, for MCB requirement and DP requirement. Like this you will get it for multiple product. This is just for one product I have done. I can keep repeating it for IC12, IC26, multiple FG, multiple raw material. This is a scenario of multiple finished product and multiple raw material. Any doubts in this? Clear? Can we proceed? Then purchase budget, I'm not doing it. Purchase is raw material consumption which you calculated. Add closing stock minus opening stock. Closing stock is given in the question. Opening stock is 10, sorry, opening stock is given in the question. Closing stock is 10% lesser. You will get quantity, multiply with the price 60, 20, 12 and 8. You will get the value. You will get the value. So till this we are done. Production we did. Based on this, you get your component usage budget. Based on component usage, you get your component purchases budget. Component purchases. One more budget which is asked in the question is manpower budget, showing the number of workers and amount of wages payable. What is manpower budget? Is planning for workers. Manpower budget, I'll do it for only grade A. There is a grade A and grade B given in the question. Grade A and grade B. Now manpower budget, exactly same format. Listen for a minute and then do it. What we will do is particulars, grade A, grade B for ACB, production, hours per unit, hours required, hours per unit and hours required. MCB, production, hours per unit, hours required. DP, production, hours per unit, hours required, total hours required, and then something on number of employees. Then something on number of employees. I'll repeat again. Production into hours per unit, hours required for ACB. Production into hours per unit, MCB. Production into hours per unit, DP, right? Particulars grade A. Production will remain same, others will calculate. Please open. Production, hours per unit, hours required. Production, hours per unit, hours required. Production is whatever we did, 6220, 8280, 3920. We write that number. Hours per unit is given in the question. To produce 1 unit, this is the hours requirement. 8, 6 and 4 is grade A. 8 hours, 6 hours and 4 hours. And grade B is 16, 12 and 8. I am not doing grade B. 8 hours, 6 hours and 4 hours. 8, 6 and 4. Other one is 16, 12 and 8. So 8 hours. Hours per unit, 8 hours. 8 hours. MCB is 6 hours. MCB is 6 hours. And DP is 4 hours. 8, 6 and 4. 8 hours, 6 hours and 4 hours. Clear? So this gives me final hours required. 1 lakh 15, 120. Every employee will work for 200 hours a month. Every employee will work for 200 hours a month. If I divide, I'll get to know number of employees needed. If I divide, I'll get to know how many employees are needed in the organization. Every employee will work for 25 days into 8 hours. 25 days into 8 hours. So working hours per employee. Working hours per employee 200 and number of employees needed. We will round it off to the higher number. Whatever you get, you round off. 575.6 means 576. Even if you get 575.1, that also 576 because you need that extra employee. You need that extra employee. 576 employees I need. I need 576 employees. And last line item is how much are we going to pay? Every employee will be paid 200 hours into 5 rupees. Every employee will be paid 200 hours into 5 rupees. 1000 rupees you will pay to every employee. 1000 rupees you will pay to every employee. So total labor cost 576 employees into 1000 rupees. Into 1000 rupees. 576 into 1000. Total labor cost 576 into 1000. 5,76,000. So this is the purpose of a manpower budget. The manpower budget will help me in finding out exactly how many employees do I need. Exactly how many employees do I need to meet my production requirement, to meet the production requirement. Clear? Any doubts on this? Okay. I'll take a break of 15 minutes and then continue the balance area. Okay, the chapter according to me is almost over. I have explained first what we do in fixed versus flexible. Also, functional budget, two different questions we have done. I have more questions. I'll be discussing them. If needed, we will solve it. But I think most of it is already solved in those MCQs. You will see here. Question 7. Concord Limited manufactures two products using two type of material and one grade of labor. So I have two products, two raw material and one grade of labor. If any budget for raw material is asked, you will say for ACB, for MCB, for DP, like that you will have to write for product A, product B. Here I have two products, product A, product B. Sales is given in the question. Sales is given in the question, and this is my opening stock and this is my closing stock, which we saw in one MCQ. In one MCQ we saw 4 days of sales, 5 days of sales, what it means. Now material X 5 is to 1, 3 is to 1, material Y 4 is to 1, 6 is to 1, standard labor hours required 3 hours per unit, 5 hours per unit. Material X and Y will cost me 4 rupees and 6 rupees. Labor is 25 per hour. Overtime premium is payable 50% if a worker works for more than 40 hours a week. We did this in one MCQ example where I split into normal time and overtime. There are 180 direct workers. If you have 180 direct workers, 180 into 40 hours per week into 4 weeks. The data will be for 4-week period. That is my normal time. Everything else is overtime. Everything else is overtime. The target efficiency is 80%. In addition, non-productive downtime. This was we saw in one MCQ. In addition, non-productive downtime is 20% of the productive hours worked. There are 4 5 days weeks. There are 4 5 days weeks in the budgeted period. Now, if I take product A, sales is 2,400, closing stock is 2,400 into 4 days by 20 days. 4 days by 20 days. Why 20 days? 4 5-day weeks. 4 5-day weeks, which will be 480. Opening stock is 400, and I'll get 2480. Like this, I will have to do it for product A as well as product B. Then product A, particulars. When I do my raw material budget, the question is asked only for material purchase budget and wages budget. But if you want purchase, you need consumption. If you want consumption, you need production. That's the order: sales, production, consumption, and purchase. Consumption, what we will do? Particulars, material X, material Y, material X and material Y. In that, for product A, production, input output ratio, raw material consumed. For product B, production, input output ratio, and raw material consumed. The input output ratio is 5:1, 3:1, 4:1, and 6:1. So this will give me my raw material required. These two budgets are not asked in the question, but so only quantity is done. They are not asked this. From this, then I do closing stock is 10 days of consumption. Whatever consumption you calculated is for 20 days into 10 by 20 minus the opening stock, into 10 by 20 minus the opening stock, into 6 by 20 minus the opening stock. This takes care of purchase budget, where they wanted quantity as well as value. Value is my price is 4 rupees per kg and 6 rupees per kg. Apart from this, there is also a requirement for wages budget. There's a requirement for wages budget, which is slightly tricky and a crucial one. I'll do detailed calculation. You need not do wages budget. Same thing for first product. First product is 2480 into 3. 3 hours needed. 2480 into 3. Second product 4300 into 5. Tell me the total hours required. So 2480 into 3, 4300 into 5. How much? 28,000. This is standard hours. Efficiency given in the question is 80%. So actual hours is 28,940 divided by 80%. 28,940 divided by 80%. What's the number you get? 30,175 plus provision for downtime. Which is 20% of 36,175, which is 20% of. The question says there is additional non-productive downtime. Why I'm not explaining in detail? Because this is we have already done in MCQ. 20%. What is that number? 36,175 into 20. After addition, how much you get? 36,175 plus 20%. 43,141,0. In this 43,410. In this I have normal time, overtime. Why this breakup? Normal time will be paid at the normal rate. Overtime will have to be paid. Normal time is paid at the rate of 25 per hour. Overtime extra 50%. What is normal time? 40 hours into 4 weeks into 180 employee. The last question wanted us to calculate how many employees are needed. In this question, they are very clear. I have only 180 employee. So till 180 employee, do normal work, pay them 25 rupees. Beyond that, tell them to do overtime. And pay them 25 plus extra 50%. 25 plus extra 50%. So in this, tell me 40 into 4 weeks into 180 is how much? 28,000. This I will incur only 25 rupees. This I'll incur only 25 rupees. Balance I'll have to tell them to do overtime. Balance they will have to do overtime, and I'll be forced to pay. I'll be forced to pay extra for that. I'll be forced to pay extra for that. Clear? Any doubts on this? 28,800 into 25 extra hours you'll have to pay 37.5. It is coming from two different MCQ, and like the previous question, for product A, for product B, same with labor also. For product A, for product B, you can have product C, product D, you can have any number of products. Next, question 8. This also somewhere I've discussed in the MCQ, but I'll discuss it. If needed, we'll solve it. A firm is engaged in the manufacture of two products, A and B. Product A uses 1 unit of P and 2 units of Q. 1 unit of P and 2 units of Q. Product B uses 2 units of P, 1 unit of Q, and 2 units of R. The second product wants 2P, 1Q, 2R. Component R is assembled in the factory. Component R is assembled in the factory, which uses 1 unit of component Q, which uses 1 unit of component Q. I had explained this in one of the MCQ, saying that I may need it for producing my raw material itself. Component P and Q are purchased from the market. Can you please quickly read this and tell me the production? Production of A and B, quickly. There's nothing there. Tell me the production of A and B. 6,000 and 6,000 and 12,000. Production of both the product and the assembling of the product R will be spread uniformly throughout the year. Firm at present orders its inventory equivalent to 3 months consumption, equivalent to 3 months consumption. The firm has been advised to shift to technically EOQ. When you read it fully, it says the firm has been advised savings can be done by changing over the ordering quantity. The firm has compiled the following data: component usage per annum 30,000 and 48,000, price per unit, ordering cost per order, carrying cost per annum. They have asked us to calculate, prepare a budget of production, already done. Budget of production already done. You have told me the answer: 6,000 and 12,000. And requirement of component. I'll prepare the budget, but unfortunately or fortunately, they ended up giving this number. This will be the answer. This will be the answer. They ended up giving it, but we'll do the calculation. We'll do the calculation. Requirement of components for next year. What are the components I need? I need P, Q as well as R, but R we don't purchase. R we don't purchase. Then second and third I'm not going to do. Second is basically economic order quantity. EOQ formula, you know, square root of 2 into annual demand. And savings in cost. What is savings in cost is comparing the 12 line items starting from annual demand, quantity per order, number of orders, ordering cost per order, total ordering cost, average inventory, carrying cost per unit, total carrying cost. You can put a stop at total carrying cost also, because the price is same. The price is same. And how much is the saving in cost? And reduction in working capital. Working capital means reduction in average inventory. Working capital means reduction in average inventory value. Reduction in average inventory value or reduction in inventory value. Clear? Any doubts on this? Now let's do this component requirement. Now write component consumption budget. Component consumption budget. Particulars. Component consumption budget. Particulars. Component P, component Q, component R. Component P, Q and R. Component P, Q and R. Component consumption budget. Component P, Q and R. For product A, production, input output ratio, raw material consumed. Production, input output ratio, raw material consumed. Input output ratio and raw material consumed. My production is 6,000 units. 6,000 is for product A. What is the input output ratio between product A and component P, Q, and R? Component P, what is the ratio? Product A, component, say component P and product A. 1 is to 1. Component Q, 2 is to 1, and component R is not used. Component R is not used. That is used only for product B. That is used only for product B. So my input output ratios 1 is to 1, 2 is to 1, not applicable. 6,000, 12,000. 6,000 and 12,000. For product B, production is 12,000. Production is 12,000, and my input output ratios product B uses 2 is to 1, 1 is to 1, 2 is to 1, 2 is to 1, 1 is to 1, and 2 is to 1. So 2 is to 1, 1 is to 1, and 2 is to 1. 24,000, 12,000, and 24,000. 24, 12, and 24. Total raw material consumed 30,000, 24,000, and 24,000. Now, question says component R cannot be purchased from outside. In order to make component R, I need 1 unit of Q. I need 1 unit of Q. So, Q needed to produce R. Q needed to produce R. I need to produce 24,000 units of R. I needed to produce 24,000 units of R, and I'll be needing 24,000 units. I'll be needing 24,000. 1 is to 1. 1 is to 1. RM purchased 30, 48, and not applicable. Last product we are not buying. Last product we are not buying. 30,000, 48,000, and not applicable. We are not purchasing the last product. Last product is manufactured internally. This again I have seen in one MCQ. If you have grip on the MCQ, you should ideally be able to answer this properly. Now you see it as a part of a bigger question. When you see it as a part of a bigger question, it gives you the exam exposure. But MCQ will exactly test the concept which I wanted to teach. Any doubts on this? Clear? Can you proceed? Beyond this, we are not doing. It has asked for economic order quantity, which is more of a formality which you need to follow, and then savings in cost. Okay. Next, again, a question which indirectly gets tested in one of the MCQ which we did. DC manufactures and sells two products. I think this solving also may or may not be needed. I'll explain. Super and Deluxe. DC Limited budget department gathered the following data: expected sales, selling price per unit, expected inventory, and closing inventory. You had done 0.1 PP and solved a question and gave me an answer. I think the number also remains the same. 49,000 you will get one question, you had solved one MCQ. The same thing is tested here. My closing stock is given as what? 10% of production. Closing stock is given as 10% of production and 8% of production. Okay, there is a wastage. Which analysis I may have to do? Wastage analysis I'll do. Company uses material A and B in the manufacture of product Super and Deluxe. Projected data for 2001, 2021, 22 is material cost per kg, normal wastage. What is the use of the wastage is what I have to analyze. 2 is to 1, 4 is to 1, 3 is to 1, 2.4 is to 1. Opening stock is given in the question. Cost of opening stock is there. Closing inventory will be 10% more than the opening inventory. Closing inventory will be 10% more than the opening inventory. Production budget we are not going to do. That is what that MCQ did. The production budget, which is what that MCQ did, where what you did, sales plus closing stock is equal to opening stock plus production. You said closing stock is equal to 10% of production. Assuming I have this number 49,000 and 70,000. Beyond this, I have to proceed because I have to understand what to do with wastage, what to do with this wastage part. There's a normal wastage of 4% for A, 4% for B. Sometimes the wastage can be separately for A and super combination. That is for the product, they may give a separate wastage. For the other product, they may give a separate wastage. Depends on the data in the question. Here, they have given one uniform wastage, 4% for A, 4% for B. Now, my from production, I'll get raw material consumption. Once I get raw material consumption, I'll have to give effect to this 4% adjustment. I'll have to give effect. Once that is done, material purchase budget and all, again, I'm not going to do because purchase budget is consumption, add closing stock given in the question, deduct opening stock. One more requirement which I have not or I have removed, I think, is the price stores ledger. The question may end up still asking for a price stores ledger even in this question. I'm not sure if I've removed it because it says company accounts direct material using FIFO method. Or okay, because they've asked FIFO method, this material usage budget in quantity and rupee. When you have to do the rupee part, opening stock will come at opening price and current year purchase will come at current year price. The current year purchase will come at current year price because there is a difference in the opening stock price and the current year price. This is under FIFO method we have to do. Let's do direct material usage budget. Direct material usage budget. Direct material usage budget. Particulars and two products. Material A, material B for super, for deluxe, for super and for deluxe. In the end, I have to give effect to some loss for super and for deluxe. Particulars material A, material B. For super, production input output ratio, raw material consumed. For deluxe, production input output ratio, raw material consumed. And I get total raw material consumed. Total raw material consumed. Production of super is 49,000 and deluxe is 70,000. Anyway, all these questions you'll have to practice again so that you get full grip on the concepts. 49, 49, 70 and 70. Input output ratio is super is 2 is to 1. Super and material A. Super and material A is 2 is to 1 and super deluxe and material A is 4 is to 1. 2 is to 1 and 4 is to 1 for material A super with deluxe. Material B 3 is to 1 and 2.4 is to 1. I want super with material A. Super with material A is 2 is to 1. Super with material A. Then super with material B. They have given in a different order. Okay. Super with material B is 3 is to 1. 2 is to 1 and 3 is to 1. 98 and 147. Then deluxe and material A. Deluxe and material A is how much? Ratio is what? 4 is to 1. And deluxe and material B is 2.4 is to 1. Here provision for wastage and final RM required. provision for wastage and final raw material required. Provision for wastage and final raw material required. Wastage is 4% for both. Listen, I will be buying 100. Wastage is 4% of that, and I'll end up consuming 96. I'll end up consuming 96. I'll buy 100. 4% is wastage, and 96 is what I'll consume. 96 is what I'll consume. 96 equal to 378. 96 equal to 378. What is 100? And 96 equal to 315. What is 100? 96 equal to 378 and 96 equal to 3,15,000. What is 100? Clear? With this, the question is almost over. They have asked for raw material consumed, which is very simple. In this, opening stock will be at 57 rupees. Balance, whatever I consume is from current year purchase, that will be at 60 rupees. That will be at 60 rupees. I'm not doing the calculation. Opening stock will be at 57. Balance is current year purchase, which will be at 60. And there is a direct material purchase budget. Purchase budget is consumption, add closing stock minus opening stock. This is the second type of budget, which is called functional budget. Then there is a third type of a budget. So I discussed fixed versus flexible, functional. Third is called master budget, which is nothing but you club your sales with production, everything, and in the end make a P&L account, make a profit and loss account, like a profit and loss account. I'm not going to solve a question because it's going to be very simple, but it's going to be like a P&L. Following is the data for the year ended 31st March 2020. Direct material is there, direct wages is there, variable factory overhead, fixed factory overhead, other variable cost, other fixed cost, profit and sales. This is a master budget. This is a master budget. In that, I am giving separate data for X and Y. Separate data for X and Y. For example, sales is 70 lakh. Sales is 70 lakh. 8,000 into 600 is how much? 4,000 into 550. That is the breakup of 70 lakh. That is the breakup of 70 lakh. 8,000 into 140 is how much? Material 8,000 into 140. And 4,000 into 157.5. That's the breakup of direct material cost. That's the breakup of direct material cost. Direct labor 600, 8,000 into 90 is how much? 8,000 into 90. 4,000 into 132.5. Total is direct wages. Total is direct wages. Variable overhead is absorbed as a percentage of direct wages. So OAR for variable factory overhead is variable factory overhead by direct wages. Variable factory overhead by direct wages. 9 lakh 50 by 12 lakh 50 is how much? 9 lakh 50 by 12 lakh 50 into 100. So 76 percentage of 7 lakh 20 is the first product. 76% of 5 lakh 30 is the second product. 76% for first product, 76% for the second product. Then other variable cost is 40 per unit and 70 per unit. So 40 into 8,000, 3 lakh 20, and 4,000 into 70, 2 lakh 80. So I've been able to break this, break this, break this, break this. This, if nothing is there, I'll not break it. I'll not break it and write it only in the total. Write it only in the total. Now, question says, for the next year, demand will fall by 20 and 10. Wages will rise. Any change in direct wages would mean change in wages per unit. Would mean changes in wages per unit will rise by 20%. Other fixed cost by 10%. Any change in fixed cost means a change in total fixed cost. Products will still be sold at a discount of 20%. Prepare a product wise on marginal costing. Marginal costing means first write sales, write variable cost. What are variable costs? direct material, direct wages, variable factory overhead, other variable costs get contribution, fixed cost deduct directly from the overall value, directly from the overall value. I don't know the breakup, I don't know the breakup. So this is what they technically want us to do. This breakup which I was indicating is returned, and finally I get a profit of 8 lakh 50. Same table you will have to repeat again, where there's a change in selling price, there's a change in wages cost, and there's a change in other fixed cost. Other numbers at a per unit will remain same for variable, overall will remain, and units are changing. 8,000 and 4,000 will change. 8,000 and 4. So this is technically more like your fixed versus flexible budget, more like your fixed versus flexible budget. With this, my discussion on this chapter is almost over. What you still need to complete is, there is one segment which I have not done, which is called as fixed overhead ratios. There is one question on ratios, which is their budget ratio. I'll be doing that. I have removed it from this chapter and taken it to standard costing chapter. So I'll be discussing there. When you look at your study mat question, you may find one question on budget ratio, which is not there in this chapter. I have removed it and moved to another chapter called standard costing. There we will be discussing it. This chapter, whatever I'm doing in this class, the 10 question, more than sufficient. You should be in a position to handle any type of a question, unless it becomes very, very tricky. Very tricky, I'm not telling, but otherwise, complete these questions which I did and look at your study mat question. Mostly study mat question also would have got covered. So with this chapter gets over.